Silver's identity crisis. Silver bulls got the metal right, they just measured it wrong. If you bought silver during the run-up to $116 in February, you spent the last 6 weeks wondering what went wrong. The metal didn't break, the story did, because you measured with a yardstick that isn't built for the job. The yardstick is the US dollar, the most actively managed asset on the planet, managed for expansion, by design, by people who don't lose any sleep over your silver position. We get the appeal. A silver coin in your hand feels more honest than another government promise. You can drop it on a table and hear the argument. When you measure silver in dollars, you're measuring a hard asset against a unit that gets actively diluted on purpose. But there's a better yardstick. It just doesn't fit on a bumper sticker. Silver is money is what trips you up. You've heard the slogan 1,000 times at gold shows and keynote slides, and almost every silver bull bio on X. Silver is money. Maybe you've said it yourself. We've nodded at it for 25 years out of politeness. It also happens to be a bit wrong. Germany dropped the silver standard in 1871. The US demonetized silver 2 years later. By 1900, the world ran on gold. Silver's monetary career is over. The bumper sticker outlived it by 150 years. The dollar is a managed currency engineered for expansion. Silver is a passive lump of metal that gets dug out of the ground. They have nothing in common except that one is used to price the other. Stick with me here. The era where silver led every metal. Step back from the last 6 weeks and look at the era that matters, the largest M2 expansion in modern history. Since March 2020, silver's returned 437% against 193% for gold, 192% for platinum, and a 15% loss for palladium. That isn't a coincidence. Silver does exactly what it's supposed to do when the unit measuring it gets diluted on purpose. The Slogan has been hiding that mechanism behind a worse story for 150 years. The yardstick that actually works. Anchor silver to M2 instead. It's the broadest practical account of how many dollars are floating around. When M2 grows, every existing dollar becomes a thinner claim on real things. Silver is real things, in a vault, a panel, a contact, or a circuit. The price doesn't go up so much as the unit measuring it shrinks. 3 reference points come out of this chart. The 2011 ratio puts silver near $97 today. We hit it in February when it was over 116, then corrected through it. The 1980 ratio puts silver near $500. Money supply back then was less than a tenth of what it is now. Today's value sits below both. Treat that as a ruler though, not a target. We're not calling for $500 silver. We don't know anyone who can forecast silver to the dollar without lying to himself first. The bumper sticker bulls just sold the bottom. The bumper sticker bull buys silver because it's money. When the slogan gets tested by a 30% correction, the thesis breaks with it. Sell at the low, buy back at the top. The reason to own silver doesn't survive contact with the price chart. The M2 bull buys silver because monetary expansion is structural. Deficits rarely shrink for long. The Fed's balance sheet has not gone back to its old world, and M2 has a habit of growing after every political promise to get serious. That's a different reason to own silver, but it gives the thesis a spine that survives a bad month, like on this chart. When silver corrected from $116 to $70, the bumper sticker crowd pulled $4.68 billion out of SLV, the ETF, in the first quarter this year alone. That's against just $1.4 billion of inflows. You can't survive this trade on a slogan. Silver investors often get the macro thesis right. They buy whatever has silver in the name. Some of the biggest silver branded companies don't have the silver exposure investors assume. For example, Pan American Silver, the company with silver in its name, gets more of its revenue from gold than from silver. That's the question the room doesn't want to hear. 74% of the world's silver comes out of the ground as an accident. In this month's edition of Katusa's Resource Opportunities, we put every major silver producer in the world through a screen. A few of the things we found. The most consistent operator in the large cap group, has just under 6 years of reserve life left, and management has decided not to fix it. We named the company explain why that's a deliberate choice and not a failure. Plus, the cleanest mid-cap operator in the sector that has 2.5 years of reserve life and 100% of its production in a jurisdiction that's getting harder by the year.